a short week and a down week in a downtrend after that beautiful week we had last week that gave us a huge volume bar. Well, we've pulled off a little bit. Now, was the market just digesting that unprecedented move that we had last week based on Trump's post, or are we continuing in our downtrend? I'm going to look at the SPY with you guys today, and the point of that analysis is to identify whether or not we are more likely going to continue down next week or whether we're setting up nicely for a bounce. What are the catalysts that's going to move this market higher? Now, I just got off the phone with Stock Up with Larry Jones. He happened to call me right before I was going to hit the record button. And him and I were chatting about Trump and Fed Powell. Trump out there trying to throw hands with Fed Powell. Let me get the quotes right. He said, "Too late, always too late and too slow." And he said, if I want him out, he'll be out there real quick. So the bottom line is, I've got a question for you guys. Is this now, are we turning to the blame game because things are a little bit rough here in the World War tariff? Is Powell holding the markets back? Is he the problem right now? I actually had a slightly different take after the Fed spoke yesterday. I actually thought that his calm demeanor and his view on the overall market was that he didn't seem panicky. He didn't seem like he was going to throw in an emergency cut because the economy was coming to a halt. He seemed to imply that things were exactly as they had been and that they were monitoring them. And I took that as more of a likelihood that we weren't descending into a spiral towards a recession. So I kind of took it as bullish myself. Now, here we are, and we have a long weekend, and anything can happen, especially a Trump post. Anything that says that some deals have been worked out. You know, they said on Wednesday that they had 15 deals in the works. We know that they're close to a deal with Japan, and any type of positive news coming out over the weekend, and the markets could be green next Monday. So we are in a precarious spot. All I can tell you when it comes to the positions that have been taken is that if we do get a bounce and a continuation move after the Magnificent Seven were in bear territory, down over 35%, you would be kicking yourself if you didn't take some risk. Now, I would suggest that now is not the time to go all in, because the overall trend that we've been in all of 2025 has been bearish. And so if you're going to take some risk, you want to do it with some reasonable position size, and you don't want to put yourself in a situation where you could potentially blow up your trade account. But as far as long-term investing goes, we've got the first big tech company reported earnings today, Netflix, and they crushed it. They did very, very well. And it wasn't based on new subscribers, but they had done a lot to prevent people from sharing those passwords. I still have a complicated network of children and son-in-laws and folks that are using my subscription. So they haven't done enough to clear out all of the abuse, but they're definitely going after it. Let me go over some of the deal here with the Netflix earnings. Revenue was $10.54 billion. That was a 13% year-over-year growth. That's huge. That's absolutely amazing for a company of their size. That beat the estimates of $10.5 billion, so that was a nice gain. Earnings per share were $6.61 versus the expectation of $5.68. They had a 27% year-over-year operating income of $3.3 billion. And an operating margin at 31.7% versus 28%. In addition to all of that, he gave great forward guidance that beat the expectation of forward guidance that analysts had had. Now, this is the classic setup for stocks to go up in value, which is increasing revenues and, more importantly, increasing or accelerating profit margin. That's what Netflix delivered, and the stock absolutely shot up. Now, we had a play going on this right before close, and it was basically a straddle because the percentage move that had been priced in that was visible through the IV was greater than 8%. And our straddle only required a 5% move to give us a pretty nice profit. Now, if you don't know what a straddle is, that might be a topic for another video, but the short of it is when you play both ends of the trade. You buy a put and a call of equal value because you're expecting a big move. And if the move is big enough, one of them will expire worthless, but the other one will move higher and lock in a profit. So you're not going to get as big of a move as if you were going to trade just one direction and guess it correctly. But since you're trading both directions, as long as the move is explosive enough, you should walk away with some money. Now, right now, if we go into the chart, and I'll give you guys some basic technicals for them, we have the target right now of a really strong follow-through move on Monday would be for Netflix to hit 1030. I would be deeply in profit and very happy with my trade if it hit 1024. What I don't want to see it do is clock in at 1016, because then my trade would largely just be a break even on Monday and I really wouldn't gain or lose, which isn't that bad either when you consider how hard it's been to take risk in these extremely wild swinging markets. So Netflix, I'm curious to see. It's the first of big tech to report if it's going to get a sympathy move with the rest of big tech. I've been saying for a while that I think that at bare minimum, we're going to see institutions begin to take some of their shorts off the table, right? Because they don't want to have the risk of holding them through positive earnings like we just saw with Netflix. And just a quick commentary on Apple. Obviously, world war tariff is going to have a negative impact on a ton of companies. But as we've talked about it, Trump keeps kicking the actual tariffs down the road for the most part and delaying that ultimate impact. There are some tariffs on, but for the most part, it really hasn't taken effect. And these guys saw this coming because Trump gave them a ton of time to prepare before Liberation Day, which means that they stockpiled and loaded up. And the fact is that move could have caused them to begin to have a lot of inventory and actually move product better here in this first quarter. And we could be surprised to find that they did better than most people expected as well. So if we get through big tech earnings, which begins next week, and they again are beating both revenue and profit margins, well, a lot of people are going to be taken by surprise with that type of a move. So I wanted to quickly analyze the SPY and talk about what clues do we have right now? Are we setting up for a bounce? Are we setting up for a breakdown? I'm going to get into that in just a minute, but let me just say, this is the Stocks with Josh show. Thank you for joining me today. Thank you for hitting the like. Thank you for dropping a heart. Thank you for subscribing to this page where I give a lot of technical analysis as well as plays on a regular basis. This community is also tied to my pro trading community called ChartGoat University, and I did a live trade session available to everybody this morning, and we had a couple nice wins. We closed out the live trade session in some calls because the market began to reverse. I jumped into some calls, and when we closed out the live trade session, they were up 15%. Now, it was a pretty choppy day, but the setup that I give every single morning, I give these trade setups, these A-plus trade setups, man, again, they worked like clockwork. And I held that position, and it moved up throughout the day. And it was pretty choppy, but I held it. I had a stop loss in, but I thought, so worst case scenario, I'll lose a little bit of money or I won't make the profit that I had in hand at one point. But I thought, no big deal. And sure enough, as the day went on and I went about my business, I came back to it and I was up 53%. Well, I started watching it pretty carefully. Then we got up to 60% and we were right underneath the area of resistance, which was given to everybody before the market even opened. These trend lines that I give every single morning. And lo and behold, that was the wall. So you know what? I wasn't needing to carry it much longer. I thought, you know what? This is a nice gain. I would have been thrilled with 30%, but here I was, ended with a 62% profit, and I locked in those gains. And I turned around, I notified the Discord. I said, guys, I'm good. I don't know what you guys' intention is, but here we are at my level of resistance. we've moved up quite a bit. I'm taking profits. And of course, as we went into close, it just rolled over and went straight down. So largely, this was not a huge trending day. And I just as a little note for those who are trying to get consistent on Wall Street through their trading, you don't want to really be taking big risk on a non-trending day. Today was largely flat. It was what they refer to as an absolute nothing burger. No big news, no big events, no big catalysts, and kind of went sleepily into Good Friday tomorrow, which, to be honest with you, probably is not a bad thing. We ended the week on a win. The market ended the week on a decent size red candle pointing to the downside, but anything can happen as we move into next week. We have a big 4-day weekend with a ton of opportunity for news. So thank you guys for hitting that like and subscribe. We made money again in the Stocks with Josh Discord. The trade setups worked again in the Stocks with Josh Discord. If you didn't do too well this week and your portfolio is down, I want you to consider coming and joining this community. I'm going to leave a link in the top pinned comment. It's the name of the show, is the name of the website, www.stockswithjosh.com. Now, another cool thing I want to comment on real quick, we added an incredible value to the SWJ community, which is an options calculator. You can go into the options channel. You can simply say, show me unusual options for Tesla, Apple, Netflix, Snow, NVIDIA, whatever you want. And it'll give you a beautiful range of whether it's more bullish or more bearish, right, in the big picture view for all of the options that are currently being taken at the moment. But it'll also tell you in the last 3 days or in the last week what the current trend is. So how big of a position are people taking in the local time frame? So it gives you a perspective of in the longer or midterm time frame, are people bullish or bearish? In the short term, are they bullish or bearish? Let me know in the comment section if you liked this new channel release. And it's an ongoing project because we have a ton of development and a phase 2, which is going to help people estimate how to set their stop loss and how to know what the right option price is based on the stop loss recommendation of the underlying shares. Guys, it's a teaching Discord, okay? So, if you're saying, I didn't understand anything you said, Josh, don't worry about it. Come join the fam. And one of me or my crown traders or one of our incredible admins help people from falling off cliffs when they're getting themselves in trouble. Not even part of the crown traders. I got to give a shout out to Ray Dell. It's one of those guys. Parker is one of those guys. I got some great people in there and I appreciate everybody. Okay, enough on that. Let's talk a little bit about the SPY. What do I see? Now, we entered into a number of options, some call options, some skips for June on the Magnificent Seven. And I gave some lines in the sand, which if we crossed below would invalidate the up move. Now, this is the kind of market that can shake you out of a trade pretty easy. And as we get into next week, we're looking at beginning some of the earnings from some of big tech, right? I'm going to go over that real quick. These are the things that we're going to be watching next week. Let me just go over it. We've got earnings reports on April 22nd and the 21st for Tesla and Alphabet. Google, right? And personally, I like Google here. And they're dealing with some regulation problems. And, that's holding the stock price back. But, you don't want to be buying a company when it's soaring and it's on its all-time highs. If you believe in the company, which I do believe in Google, in particular, they're crushing it with their AI solution, Gemini. And I believe that they are definitely proving to me that they can not lose their moat around their business by being a leader in the AI space. And so, yes, they've got some headwinds and they've got some problems, but they're reporting earnings next week. And I think that they're probably going to show that they're doing pretty well, similar to Netflix. Now, I will make a specific recommendation for a potential trade on Google next week. It'll be interesting to see how this Netflix trade works out for us on Monday, and it'll give us a sense of how the market's going to respond. If Netflix goes down on Monday or doesn't continue to pump to at least 1030, now it could go up to 1064. That's the full 8% move that the implied volatility suggested. But if we don't at least get to 1024 or 1030 on Monday, it tells me that the market's bearish, and it doesn't matter how good these companies are doing, they don't want it. Institutions don't want it. They're selling, they're unwinding, and they're preparing for the Trump apocalypse, where he runs into Fed Powell and downtown Wall Street in front of the bull, and they just start going at it, till only one survives. All he's looking for is a rate cut, Fed Powell. That's all he wants. That's all we want. Just give us a little bit of money. Ease up a little, my friend. I think Fed Powell's doing fine, and I don't want to see him gone from his position. I don't think that's such a controversial view, but I bet people are going to tell me in the comments section that he's no good. All right, next week we've got China with a rate cut decision on Monday. The People's Bank of China may cut interest rates to boost their economy. Now, this would be good for us because stimulus globally is stimulus in the US, because our economies are tied together. And obviously we can't forget that. That's the reason why we're having all this market drama to begin with, is because of how closely knit the global economy is right now. And so if China pushes a stimulus, eases their rates, then it would be good for us as well. That could be a good news story for all of us. We've got Tesla and Alphabet's earnings. Tesla, I'm going to use a designated video for that. I'll definitely talk to you guys about that before earnings. The chart, it's holding up, but it looks bearish. I'll just be honest with you. It's holding up, but it's got some strong bearish overtones. And so it needs to do more than hold up. It needs to move up, and then we can get more bullish on Tesla. Okay, I like Tesla. And personally, I believe that for me, I would be crazy not to be buying some Tesla right now, because I believe that we are in the era of AI and robots, and a lot of people have not figured that out yet. And Elon was out the other day saying that he would have 5,000 robots. This is the first legion of robots that is going to be unleashed on the United States. It sounds so ominous. And they're getting released this year. And, this innovation could improve productivity and improve profits. It could take your job, so you need to be prepared and get involved in the investor economy. But it will increase productivity and thereby increase profits for big corporations that have deep pockets and are more than capable of investing in these spaces. And that will cause the share prices to go up. And Tesla is the tip of the spear for that here in the United States. That we don't want, and think about this with me, and this is no criticism towards China, but there's never going to be a legion of Chinese robots that we buy or are in the United States. Okay, it's just not going to happen. So it's got to be an American built, based, programmed AI product. And it's why Elon is in the front row of this innovative, technological, global changing development. And so I think the point is that if the stock price is $240 to $250 today, this thing could easily be $500. And so, if you are at all bullish, you consider a little nibble, a daily buy, $5, $10, $20, whatever you could afford is what I would recommend to my close family, because I think in the long run, Tesla is still one of the most relevant and risky big tech plays out there. They're reporting next week, and I'll talk about them some more. On Monday, we got the PMI, some more data for the Fed. And hopefully he's still in his position and office come Monday. All right, I'm going to leave it right there. Oh, wait a minute. We still got to talk about the SPY. All right, let's jump into the SPY real quick. We are beginning to get some pink bars on the histogram, which means that we are potentially moving towards a contraction, a roll up, and potentially a reversal. I want to point out that down here on the weekly time frame, we hit oversold, and you don't normally hit oversold twice. Now, I'm going to go through this chart with you real quick and show you some interesting things. Back here in 2022, when we were in that mild recession, we did hit oversold twice. But we were already clearly in that downtrend for months and months and months, right? We were halfway through it. And when it did hit oversold twice, it actually was right before a pretty big move up, and ultimately not long before a move higher that led to the incredible years of 2023 and 2024. So you cannot ignore being oversold on the weekly time frame on the RSI. Back here, when we were in 2020, was a rare time in which we got oversold on the RSI, and that led to explosive moves. Back here, we didn't get oversold. We got very close to it, and it also led to explosive moves. And so just keeping it simple, I really wanted to end this week focusing you guys on that RSI because it's a powerful, powerful tool. We already got oversold last week. That's why that big green buying candle when the Magnificent Seven were down in extremely low prices is so big because people bought. Now, when institutions began to buy, after them, some retail bought and it drove the prices higher. Well, that part's getting digested out. It'll come back. And I believe that we're still in that bounce. And I'm not calling it a failed bounce. Someone out there who's technically savvy is going to say, well, when do we declare it a failed bounce? Well, those are my invalidation levels given in the Stocks with Josh Discord. But if you want me to break it down for you, it would be a move greater than 50% of that big green candle. So if we break lower than a 50%, we break through the halfway mark on that weekly green candle, then we've invalidated the move and the trend continues down. I want to wish all of you guys a happy Good Friday, a restful Saturday, and a beautiful Easter. I hope you're able to spend it with your loved ones, resting, celebrating the Lord. For me, that's the Lord Jesus Christ. I appreciate all of you guys, and I appreciate those who watch my video and follow me and are part of my community on the Stocks with Josh Discord. I'm very committed to improving everything that's done, both in the videos and on the Discord, to help people make money and to be consistent investors. And I see so many people in there. I could shout out a bunch of names that are clearly getting better and better, and I see their profits increasing more and more over time. And on that note, let's be careful. We're still in a sketchy environment. We're going to take some risk, but we're going to do it modestly because we don't have solid confirmation that we're ready to rip. But next week should be very, very interesting. I appreciate all of you guys. Peace and blessings. Take care. Happy Easter. We'll see you in the next video.